My name is Arabile Kumet and I am delighted to be your host for the launch of the 2021 Old Mutual Savings and Investment Monitor. From here on will be known as OMSIM. Now, for the past 12 years, this annual survey has been a key national indicator of the financial behaviours of South Africa's metropolitan households. Just last year, the survey threw a lot of light on the effects of the first wave of the COVID-19 pandemic on people's financial decisions. This year, the survey again offers great insights into the monumental shifts in behavior that were caused by the pandemic. I would be amiss, of course, not to make reference to the recent unrest that our beautiful country has recently experienced, as well as how this too could be a contributing factor to how our population may be having to review and even reassess their financial situations. Just to keep a finger on the current pulse of working metro households, Old Mutual went out to field with an additional special survey to see if there were any fundamental shifts in financial behavior based on that unrest. Lynette and Isak will share some of their insights with you as well as the overall OMSIM results shortly. Now, from the OMSIM main findings, though, what we do know is that 87% claim that COVID has made them change the way they think about as well as manage their finances, and 38% are still earning less than they were before COVID. This is just two of many key findings that we will share with you today across the OMSIM survey. The purpose of the survey is, of course, not just to unearth interesting facts once a year. The main reason for the monitor's existence is to deepen our collective understanding and knowledge of South Africa's relationships with their money. Our researchers delve into what we South Africans feel, think, and even do about our finances, and specifically in 2021, how we are adapting to the barrage of changes that COVID-19 has flung at us. Join me then in welcoming and helping to unpack all of these insights. We're lucky to be joined this morning by Ian Williamson, the CEO of Old Mutual. We also have Isak Odendaal, who is Old Mutual Multi-Managers Investment Strategist. Lynette Nicholson is the head of research at Old Mutual, as well as John Manyike, the head of financial education. We will wrap up, though, with a closing remark from Musala Phillips, who's the chief marketing officer at Old Mutual. Now, just a few notes and housekeeping rules before we kick things off. All of the material shared with you today and more will be made available and published on the Old Mutual website. You can find this at www.oldmutual.co.za/savings monitor. Now, let's share these insights and invite others to join the conversation as well on social media, why don't we? Let's just make sure we use the hashtag know better, do better. Now, if you have any questions during the presentation, we encourage you to jot them down in the chat bar on the side of your screen. We will do our absolute best to answer as many of your questions as we can at the end of today's session. Now, let's get things started. Ian Williamson, it's a good morning to you, and it's over to you as well then to share your perspective on the importance of the 2021 Old Mutual Savings and Investment Monitor.
Thank you, Arabile, and a formal welcome from me to all of you joining us this morning. We've got representatives here from National Treasury, from the South African Reserve Bank, the Financial Sector Conduct Authority, the Johannesburg Stock Exchange, our National Credit Regulator, the South African Savings Institute, ASISA, Postbank, etc., to name a few. And of course, a big welcome to the members of our media corps that are here today to help us spread the insights that we have gathered from this year's research with the Old Mutual Savings and Investment Monitor. I think we all know that there is an urgent need for improvement in the savings culture in South Africa, and it's one of the major socioeconomic challenges facing our society. And COVID-19 has only heightened the urgency of this national objective. We continue to experience a lot of volatility in the economy, with detrimental effects on people's personal finances. And it's especially in times like these that we're reminded of Old Mutual's purpose, our reason for being, which is to champion mutually positive futures for all stakeholders. Understanding people's financial situation is a key part of this, and so we continue to conduct the Savings and Investment Monitor every year as a critical set of data points to realizing our purpose. It's imperative that we help people to sustain, grow, and protect their prosperity. By sharing our knowledge and effective money management skills, we believe we're contributing to meaningful economic growth and social development. The Savings and Investment Monitor is one of the tools we use to enable people to understand the financial situation and to practically provide ways to accelerate financial understanding across South Africa and other countries in Africa in which we operate. We believe that financial education and inclusion is key to reducing social issues such as poverty, inequality, and unemployment. By continuing to invest in financial education, we know we can build a more prosperous future for the generations of tomorrow. The need is real, the challenge is enormous, but through sustained effort, we believe Old Mutual can play a meaningful part in creating opportunities for sustainable change in financial education across the continent. To help people improve their financial planning skills and abilities, we need to have a deep understanding of consumers, of what and how they think about their finances and how our economic conditions are influencing their habits and decisions. And that's where the Old Mutual Savings and Investment Monitor comes in. We've conducted this survey since 2009 to gain a clear insight into attitudes and behaviours of working metropolitan households across South Africa. By understanding what influences people and how they think about the daunting challenges that they face, we're able to create innovative and relevant financial solutions for them. Solutions such as our recently launched Old Mutual Protect product range that we launched in July last year. It's the first of its kind. It's a single flexible risk insurance solution that's fully customizable to a single customer's individual needs. You only pay for the cover you need. It's simple, online, and aimed at retail customers across all of the demographic segments in South Africa. But in short, back to the Savings and Investment Monitor, which is what today it's all about knowledge. And in the words of Benjamin Franklin, an investment in knowledge always pays the best interest. We believe in the truth of the old adage that applied knowledge is power. And by sharing the findings of OMSIM today, we hope to empower, encourage, and inspire more South Africans to act now and do great things for their financial futures. Back to you, Arabile, and back to the team to share the findings.
Ian, thank you so much for that. And of course, championing mutually positive futures for all stakeholders, well, that is certainly a great purpose to have. A great responsibility too, as it means the financial advice and education that is provided needs to be up to date, first class, and spot on. Next up on our program today is Isak Odendaal, investment strategist at Old Mutual Wealth. Isak will give us the macroeconomic background to the status of saving and investing in South Africa. Isak, it's over to you.
Thank you, Arabile. Good morning, everyone. Just give me a second while I launch my slides. As someone who spends my time looking at the macroeconomy, the big picture view, the top-down view, this survey is always very interesting because it gives us the bottom-up view. What is actually happening with households and how are households thinking about money and thinking about saving. So let's just take a step back and look at the very big picture here, and that is the global economy. If you look at this chart from the International Monetary Fund, it has, it's quite telling. The contraction in the global economy last year was massive. It was orders of magnitude bigger than even the so-called great financial crisis of 2008. And I think we all know pretty much what happened last year and what the story was. The good news is the forecast from the IMF is for extremely strong growth in 2021 and 2022. As you can see on this chart, 2021 growth is expected to be the best year since they started measuring growth in the global economy. Now, clearly that reflects the fact that you're coming off a very low base, so it's kind of the rubber band effect. But it also reflects, I think, the reopening effect. In other words, people who have been sitting at home, not being able to go out, not being able to travel, that is now happening as countries have achieved success with vaccinations. You're seeing that reopening effect and people are going out and spending more. And then thirdly, very strong growth is also supported by policy. So you've seen central banks cutting interest rates to basically zero or even negative. In some instances, you've seen them launch massive programs to buy bonds and create liquidity in financial markets. And you've also seen a huge fiscal policy response. In other words, governments spending money, in the case of America, actually sending checks in the post to people to go and spend the money and to support lost income. So you've seen trillions and trillions of dollars of fiscal spending going into the economy, and that is providing a huge support for the global economy that is set to last into next year. So this is good news. We had the absolute crisis last year. Now we're in a phase of very rapid economic growth and recovering from this crisis. Now the savings is very, very topical in the global economy and thinking about the evolution of the global economy, because the one thing that happened over the last year or so is that savings rates in many countries actually increased quite sharply, as you can see on the chart. Now, this is partly because people weren't able to spend. They couldn't travel, they couldn't go to restaurants, and so on. Consumption of services was much less, and therefore people just had more money that ended up accumulating in bank accounts. One estimate from Goldman Sachs says there's currently $5 trillion in excess savings across the world. In other words, that's savings over and above the 2019 level. So that's a lot of money. But the other reason, of course, savings increased, and I think that's the more interesting reason, is the fact that people are scared, people are unsure. You see this massive crisis, and a natural response is to try and build up financial buffers. And we can definitely ask whether that is happening in South Africa, and the data Lynette will share with you later suggests that people are in fact locally trying to build up buffers, and in the wake of the recent unrest, even more so. People need to get that rainy day fund built up. But of course, the question is, does this remain elevated? Do these globally high savings rates persist, or do they start receding over time? When people feel more confident about the future, will they start spending, or is this a permanent change in savings behavior? And of course, we don't know the answer yet, but it does have implications for the path of growth. So if people are going to spend some of the savings in the years ahead, that is obviously going to support the global economy. If savings rates remain elevated, clearly that is going to hold back spending and economic growth. So that is something that we'll keep a very close eye on, and maybe next year we can share some of what's been happening in that space. Locally, there's good news and bad news. I mean, the good news is if you look at the total growth in household incomes, this is data from Statistics South Africa, it's not from our survey, but the total level of household of wage income has actually returned to pre-pandemic levels. That's the green line. So in other words, people who have jobs, that total pot of money that they earn every month, that is now back at pre-pandemic levels. And that is obviously supporting overall spending in the economy. So as I said, that's the good news story. Bad news is that employment has not recovered back to pre-pandemic levels. It remains substantially below pre-pandemic levels. And that's the orange line here on the right-hand scale. And this is just looking at formal jobs, but you can see it's close to 1 million fewer formal jobs in the first quarter of this year compared to the first quarter of the previous year. What this tells you is just increased inequality, you know, and the K-shaped recovery that gets spoken about a lot in the context of COVID. Some people are doing fine. A lot of people are really, really struggling. And of course, if you think about the unrest that we had, you know, 3 weeks ago, I think this plays a role. The fact that you have unemployment that has not recovered yet, that inequality has increased, that there's a huge pressure on a large segment of the population, you know, feeling tremendous financial pressure. And I think the findings Lynette will share with you later will echo that. So again, there's good news and bad news in terms of the state of household finances. Where there is unambiguously good news is in terms of the external performance of the economy. Commodity prices have increased very, very strongly over the course of the last year, and that has boosted South African exports to record high levels, as you can see on this chart. This is really a big silver lining for our economy at a very, very tough time and a very delicate time. And you know, it's hard to understate how positive this is, because it influences a whole bunch of things. Number one, obviously, those companies that work in the export space, that's good for them. But it also has supported the recovery in the rand, the recovery on the JSE, but also, importantly, it's led to substantial increase in government tax revenues, and therefore government was able to respond to the recent unrest by, you know, reinstating that 350 rand a month grant, which is basically funded out of this export boom. So there's no additional borrowing to fund that grant. It's coming from the commodity. Obviously, commodity booms don't last forever. Commodity prices are cyclical. At some stage, they will turn. So it is important that, you know, the reforms that President Ramaphosa is embarking upon to grow the economy and to make it easier to do business in South Africa, that those continue, and so that we are ready for the day when commodity prices do actually turn. And then just finally, from my side, if you think about just confidence and investor confidence, I mean, obviously the unrest recently has dealt confidence in the economy a blow, but the financial market response was very, very muted. I think from a financial markets point of view, South Africa is seen as an emerging market, and emerging markets typically have socio-political problems, and therefore, you know, the events of the last month or so, not out of the ordinary for emerging markets. One of the things that we've experienced over the last while is that investment returns for South African investors have been under pressure. And of course, if you think about savings behavior, you know, people often invest based on past returns. Now, we always say don't do that. We always say try and look forward, don't look back. But in reality, people do look at, you know, the recent returns to make the investment decisions. So it's encouraging, therefore, that the investment returns over the last 3 years to the end of July have been quite positive across a range of asset classes, including South African equity, which will be the bulk of most pension fund assets. Strong returns from global as well, even South African bonds, you know, regardless of the downgrades and all the debt concerns, South African bonds still giving you 9% per year over the last 3 years. So I think the fact that investment returns are better is also encouraging for investor behavior and probably encouraging people to start thinking about investing for the long term. So just in summary from my side, I think we're experiencing a very strong global economic recovery. Clearly, there are still risks. You know, we've got the Delta variant, but we also have fantastic progress globally with vaccination. So the global economic recovery is going better than expected. I think that is obviously a very, very big boost, and South Africa always benefits from a strong global economy. The one thing COVID has done in South Africa and globally is just to increase inequality. Because some households do fine. Those of us who can work at home, you know, we're fine. Large segments of the population have suffered from job losses and income loss. And of course, inequality does have all kinds of other social consequences, some of which we may have seen in the recent month. And thirdly, I think, as I said, you know, time will tell whether we've seen a permanent change in savings behavior, both in South Africa and globally as a result of the pandemic. as a result of people, potentially building up buffers for the next crisis, whenever that might be. So with that, I'll hand back to you, Arabile, and hopefully take some questions at the end of the session.
Isak, thank you so much for that. We do apologize then for a little bit of the break as well in some of the connectivity there as well. Just a few gremlins, I suppose, then coming through on the internet side of things. But Isak, really great to have had that discussion. Certainly challenging times. It's also clear that challenging times present some form of opportunity as well, right? And if we're armed with knowledge, we can then take action and begin to do great things, because when we know better, we can definitely do better. And the Savings and Investment Monitor is our gateway to knowing better. We will, though, now pass the mic to Lynette Nicholson, who is the head of research at Old Mutual, to hear more about the key OMSM 2021 research findings. Lynette, it's over to you.
Thank you so much, Arabile, and good morning. It's still morning, I think, maybe afternoon to all. Thank you for joining us today, and I'm excited to be able to share the 2021 Old Mutual Savings and Investment Monitor results with you. So let's kick off. Just a reminder what the survey is about. We did do the survey online again this year for obvious reasons, as we did last year. We achieved just over 1,500 respondents in 7 major metropolitan areas, working metropolitan people. So I do need to just remind you that these are the lucky ones, the ones that are employed. Personal incomes of over 8K per month, because we went online, and we have weighted this back to the South African population. The research was done just between May and June, or just over May and a little bit of June, just to give you an idea of the timing. Just to set the scene up front, we do have our Z generation cohort of our population creeping in this year, and we're starting to monitor this one. In years gone by, the Y generation was always the interesting generation, wasn't it? The millennials. And lo and behold, these Y generation individuals are now, some of them approaching 40. Can you believe it? So we've now started to look at the X generation, the Z generation, which are the 18 to 25-year-olds entering into the job market. And that's a very, very interesting segment of the market to have a look at. So all our results are not presented here, but necessarily here because of timing, but in our reporting, we have broken it up by these generations. So what are some of the key themes we're going to look at today? Well, sentiment about the economy, current financial situation, dependency issues, financial priorities, debt, informal savings, sources of income, and we're going to introduce you to what we have named and called our polyjobbers, which is quite an interesting finding. A little bit on pre-retirees, and then just to end on a lighter note, a little bit about how people are entertaining themselves during this period. So if we look at our slide, and those of you that have been with us over the years will know this slide, is around how confident people feel about the South African economy. And we posed that question to them. I feel confident about the economy, and we monitor how much they agree with that statement. Don't be confused. In 2021, you will see 2 bars there. The one is the normal savings and investment monitor that we do and we release now, which is the 34%, exactly the same as last year. But what we quickly did three weeks ago, just post the unrest, was we quickly went back into field just to see how some of the main metrics had changed. And that we found slightly down at 31%, not surprising, back to the levels of 2016, which was a very difficult year economically for South Africa. What does our word cloud tell us? And this is word cloud is derived from asking people, give us 3 words that you would use to define or to describe the state of the country at the moment. And this is the word cloud. We do have a build-up over the years, but what I can tell you is that certainly corruption is a bigger word this year around. Unemployment is a bigger word. Disaster, COVID. So yeah, not a great picture, but I don't think unexpected as well. I'm satisfied with the way the government is handling the COVID-19 situation. We obviously only started that last year, which was 56% said yes, they're satisfied. This year it's down to 44%. Right. Isak did mention about incomes, and you will see once again this income question was compared to pre-COVID. How is your, what are you earning? Are you earning more? Are you earning less? The same as. And the bottom two rows there that are highlighted, just give the percentage of those that say they're earning less than they were before COVID. So last year was 53% and this year is 38%. So still quite a significant proportion saying that they're earning less to some extent. And what we're going to see a little bit later is some positivity, if I can say that, or some ways that people are trying to bridge that gap in terms of earning less and what they're doing. Your satisfaction or their satisfaction, our satisfaction, consumer satisfaction with the financial situation out of 10, we're at 5.9. Once again, it's very similar to 2016. And slightly up from last year. Of course, there are major differences between the different income cohorts, and that is all shown in our report that will be published later today on the site, where we divide it up by incomes, we divide it up by gender, by age, etc. But certainly, yeah, 5.9 overall. Financial stress levels. How stressed are you financially? And very similar to last year. Last year, if we add the top 2 blocks up on that bar, you'll see it added to 58%, saying that they are highly stressed or are experiencing overwhelming stress when it comes to their finances. This year, it's 56%. So really, statistically, not much different. People still very, very stressed. If you lost your job, how long would you have funds to last for, we asked. And about 1 in 3 people say that they would have 1 month or less of an emergency saving, Isak referred to that as well, or a buffer saving to last them for, if they lost their job. So once again, it's slightly better than last year, where it was 40%, but still, 1 in 3 under severe pressure. But then again, we are sometimes quite a positive nation, and 61% of our respondents said they think things are going to get better going forward in the next year. This is quite different between the different generations. So our younger generation, and I mean, you find that with research across the board, not just the survey, 78% of our Gen Z population said that they think things are going to get better. And only 39% of our baby boomers, which are that 57-year-olds and up, saying that they think things will improve. So quite a big difference depending on what age category you fit into. I'm going to now introduce you, we've got 3 videos to show you. I'm going to introduce you to a Z generation consumer. His name is Kyle. And really why we're doing this is just want to show you some of the insights we picked up. And yes, this is only a sample of one that I'm going to show, but certainly this population and the access that they have to all things digital, all things, information that spans across the board, they are seemingly very clued up generally when it comes to finances. Well, relatively in terms of their age, but certainly interested, wanting to do the right thing, wanting to save. So let's listen to Kyle.
Hi, I'm Kyle Tuta. I work in the IT department, been there for the past 2 years. I am 25 years old. I'm not single. I have a girlfriend. Sorry, ladies. But she is expecting as well. I'll be 7 months. We weren't expecting a baby at all. So that was the first shock for us. And we were thinking, okay, what can we do? What's the next steps? How to save, how to prepare for the baby as well. So from there, we thought, okay, who can we speak to firstly? And we have a few friends that are in the investment field as well, such as Forex trading, as well as we found out about Bitcoin probably about 6 months ago. And we got involved in that as well. We were also really intrigued with it. I have thought about retirement, especially in the company I'm in. They're very much in regards to that. With in our salary, to take out pension, take out UIF, take out a pensioners fund as well on our salary as well. So that's really sorted for me. But yeah, I do try and ask the company if I can invest a bit more in that as well, just to add that extra money in there as well. But since the baby came, I have kept the same amount as when I started with it. I tried to save the extra money I put in the retirement into savings for the baby herself. For me, short-term savings, it depends on the season I'm in. But for myself right now, I would say short-term savings will be month to month. What my understanding of long-term savings is, I always think of the end goal, the end set of mind. And for myself, I would say long-term savings would be 5 years. So start with writing things down. What your expenses, what the things you need to spend on, such as have a list. For myself, I have a list of car insurance, house rent, food, clothing, entertainment. Entertainment was a big thing for me in the beginning, because when you want to go out with friends, what you're going to spend on, and you don't want to get embarrassed by your card being declined type of thing. So start off slow, write things down before you rush into anything. Before you buy something, go back to your list of what you wrote down, see if, okay, can I buy this shoe for 200 Rand or 2,000 Rand? Do you have the budget enough, or you're taking away from somewhere else, from your food, from your rent, or you're able to survive the rest of the month before you make the decision of purchasing?
Thank you, Kyle. And if you read up on the Z generation, they are referred to as the truly first fully digital generation, which is quite interesting. So let's move on to dependency. We last year, if you remember, if you were at our presentation, we saw this big uptick in the number of adult dependents that our respondents were telling us they had. So it went up from 43% to 52%. So who are these? Well, adult dependents. So not children, could be parents, could be aunties, uncles, could be adult children that should be out working and earning their income, but they have now become dependent on their parents or on somebody. So that went up to 52%, and it's really stayed very stable going into 2021 at 51%. Our old mutual sandwich generation figure as well went up last year, and it stayed at that position. And just to clarify again, these are people wedged in the sandwich, in the middle of the sandwich, having to provide for their own retirement, their own financial needs, having dependent children on one side and dependent adults on the other side. Our Y generation is the higher, well, in our Y generation, it's the highest percentage of sandwich generation people, which is at 47%. Right, Arabile mentioned up front that 87% of our respondents said that COVID had made a difference in some way to the way that they think about and manage their finances. So, and then 68% also said that they've started to save in some way. Now, this might not be massively significant ways of formal savings, but it might be, it includes everything. So formal, putting away a little bit extra every month, trying to get to that state where I've got a bit of a buffer so that if anything unexpected happens, I've got something to fall back on. These are for the financial priorities year on year. Absolutely. Security of income or job security is the first priority. So that hasn't changed in position. In fact, the positioning of these priorities hasn't changed. Then cutting expenses wherever you can. And we'll see now in the next 2 slides, some ways where people are cutting expenses. Paying off debt, emergency savings, and then investment, making sure that my investments are secure. So what you do find here is the biggest shift, although not in position, but in percentage, is in terms of paying off debt. So people really trying, perhaps from what happened at the end of last year, especially in the last 6 months, where people tended to accumulate a lot of debt, and trying now to pay that off and pay that down. And then in our survey that we went to just post the protests, we also had a question about people looking at the insurance cover, whether that is house insurance, personal insurance, life insurance, and we found that 1 in 4 of our respondents in that survey said that they were reassessing or assessing their insurance cover. Right, so here's some of the ways that people are cutting down. 69% are using loyalty points. Now that is up from 54% last year. So why not? Absolutely, use your loyalty points and any cashback, and yes, absolutely. 57% said that they had taken at least 1 payment holiday. Now, the 2 categories that are the most prevalent in terms of payment holidays were credit cards and vehicle finance. 39% said they've switched to a cheaper supermarket brand. 39% said that they'd either moved to a cheaper or reassessed their DSTV or streaming options. 36% had cut down on domestic help. Now, of course, that's not a great one because that adds to the pot of unemployment. But that's the figure coming out this year. 35% moved to a cheaper cell phone contract or data bundle. 31% had given up gym membership to exercise at home. And 12% of parents said that they had moved their children to a cheaper school. What is quite astounding is that 1 in 3 said that they have combined homes. So let me just explain that quickly. These were people that said, I've either moved in with somebody else or family to combine a home, or I've had family move in with me to save costs. So quite a big occurrence that as well, with 1 in 3 of our respondents claiming that. You would have seen or remember hearing from Carl about what he perceived to be short-term investments and long-term investments. And we asked that for a particular reason, because in 2013, in the Savings and Investment Monitor, we had a question asking people what their perception was of a short-term investment or savings and a long-term. So I'm just going to show you the results for short-term. In 2013, we had 44% of our respondents saying that short-term is a few months to a year. This year, we had 64% saying from a few months to a year. So what's the insight here? Why am I showing you this? Why I'm showing you this is to illustrate that people's perception of investment horizons and what is short and what is long term appear to be becoming shorter. Yes, absolutely. Kyle is a youngster. He's only been alive for 22 or 23 years. So to think of 60 years as long term, or another 40 years of saving is quite difficult for him. So you heard him say in his perspective, it was 5 years is long term, and short term, month on month. An interesting one. The not so good behaviours. What have people done that are not that great? So we've fallen behind on household bills. I've had to borrow from family and friends. That's slightly up from last year. I've cashed in on savings and investment policies, not great, also up from last year. And then we added 2 options in our question this year was around cutting down on household insurance or move to cheaper options and cutting down on medical aid. What about debt? Now, last year, if you may remember that huge increase from 2019 to 2020 in terms of personal loans from financial institutions went up from 21 to 43. Now, as a researcher, a jump like that in data is quite profound. And I remember looking at this last year and thinking, I wonder if this is correct. Is it, and yes, we did all the checks, reliability, validity of data, etc. But look at the result this year, exactly the same. So absolutely, it has confirmed what last year's results were. Slightly up on family and friends, slightly up on borrowing from a micro lender. And you'll see some of the generation differences down the right-hand side in the green box. Repayments on debt, fallen behind on credit card repayments, fallen behind on store cards, and fallen behind on home loan or home loan repayments. We always like this section, and we find it very interesting, which is on informal savings. And we do filter this on our Black respondents, just because it is more prevalent amongst our Black respondents. So 76% of them said that they contribute or they have some form of informal savings. You'll see that burial societies in the green went up also dramatically pre-COVID to 2020, which is understandable, and has gone up slightly more, 6% from 50 to 56. Stockpiles slightly up, and grocery schemes very consistent to last year. What we did find, which was very interesting, is in 2017, we asked a question about how many stockpiles do you belong to? And in 2017, 32% said that they belong to more than one stockpile. That figure has jumped dramatically. It's now 53% belong to more than one stockpile. And if you look at the contribution every month to stockpiles down the right-hand side, you'll see that it's increased year on year from 1,087 to 1,213. But it hasn't increased dramatically. So what that's telling us is that people are distributing their stockpile contributions across more stockpiles generally than they were before. What are these stockpiles all about? So absolutely, the first one is groceries. Very big, very prevalent. Then it's end of year expenses, and there might be an overlap there as well. School fees. To buy property. Interestingly, our Y generation respondents, stockpile members, that was higher amongst them at 32%. Travel, even though we haven't been able to travel, that's still an important one. Weddings, investing in the stock exchange, to buy livestock, and to buy cleaning or sanitizing products. What I'm going to do now is our second video, which is Moneri. And she belongs to 3 stockpiles. And so just listen to her explaining that and the rationale for that.
My name is Moneri. I'm 41 years old this year. I stay in Batlu with my sister and my boy. He's his first year this year in high school. I currently belong to 3 stockpiles. The first stockpile is Black Cherry, which we saving from January to November for us to be able to buy school uniforms, pay school fees, anything that we like to pay in January. And then the second stockpile is started with a group of friends who will like to travel. But then we saw that when traveling, you need a lot of money to go out. And then sometimes we'd use our credit cards and then we'll end up with debts. And we said, why don't we come up with something to save up for traveling? The third stockpile is for groceries, where a group of ladies, we pay a minimum fee of 300 Rand, 100 Rand, which goes to buying food stamps at a local grocery shop. It can either be Checkers, Pick n Pay, or Spar. And the other money will go to, we select a butcher so that come December, we buy something in the butcher. That's why we did with the grocery stockpile. And it's helping a lot. When we started with Black Cherry, we were allowing borrowing, but at this stage, we don't do that anymore because we encountered a lot of problems. And then what we used to also do, if you are a member and you borrowed money, you were given enough time to pay back up until when we were supposed to give notice at the bank to withdraw the money. And then if you don't pay your debt, then we'll deduct it from your savings.
Right. Thank you, Muneri. She had a lot of interesting insights. Obviously, we could only give you some of them. Right, sources of income. And let's get on to our polyjobber segment. So I can just explain the slide quickly. In 2017, we had 63% of our sample who said that they had a single source of income, just one source of income, and that was it. We had 13% who said that they had another form of formal type of income, and we had what we referred to at that stage as slashers, remember, those of you that may remember, or hustlers. So in our world, we refer to them as slashers, and let me give you an example. So during the week, I'm an office manager / yoga teacher on weekends, or / disc jockey. All right, we call them the slashers. This year, we have 53%, so a lower percentage of people saying that they only have a single source of income. So what does that leave us with? It leaves us with 47% of people who say they have more than one source of income. And those people we have called the polyjobbers. If you are looking at the slide and you're going, you said 47%, but this adds up to 57%. Absolutely right, it does. That is because there's double counting. Some people saying, I've got a hustle on the side and I am doing something else that's formal. So very interesting. People supplementing income, people having more than one source of income, and making plans to cover their expenses, their living expenses, etc. What we do find is that the Z generation is much more prolific when it comes to polyjobbers. Also makes sense, they are the generation that has probably been hit the hardest in terms of unemployment, and dare I say, they may be the more entrepreneurial, innovative risk takers, and I say that in a good sense. And then you can see as we go down to the baby boomers, that does get less, not insignificant, but it does reduce in terms of percentage wise. What are they doing? These polyjobbers, okay? And in this word cloud, which we won't go through in a massive amount of detail, it's all around selling, right? Because whether it's selling services or selling products, it's all around selling and getting extra income. But you'll see that mix of formal and informal in there. So some people are becoming Uber drivers as a second job. Some people are doing tutoring as a second job, and etc. And you can look in this and pick up what you want. Well, I can't spend too much time on it, but very interesting what people are doing. And now I'm going to share the last video, which is a polyjobber. We're almost at the end of my pressing.
Good morning, my name is Nariadi and I'm 36 years old. I'm a sales exec at Kivitsgreen Country Estate, all the way in Camille Drift in Pretoria. I'm a mom to two girls, aged 6 and 8. It's been really, really challenging. It's been excruciating challenging because one had to look at your expenses, you know, considering that we had salary cuts, considering that everything was a cut, and we still haven't bounced back. We're not back at work full time because the work is not there full time as well. So we're just trying to go through and just survive as best as we can. So what I do as well is also a catering business. So I've got a catering business which I started late 2016, but I officially started working and operating in 2017. So when COVID struck us in March last year, 2020, the business also came to a complete stop. So we made no revenue till, if I'm not mistaken, I think it was around about December, which is when we had our first booking since March 2020. So how basically now with the side business, with my catering business, how we're merely surviving, we're scraping by, is by now doing what we call pre-packaged meals for functions, so for funerals, which is where now I've had to divert the business into to try and also make money, is going into the funerals and doing pre-packed meals. And that is how we're trying to bounce back into the market. But as a single mom, you try to do that and it leaves you mostly very exhausted because you can't be everywhere and anywhere. You can plan, but God decides. Where before COVID, where you could say, I'm going to have 2 bottles of wine today and I can easily replace them tomorrow. It's not that anymore. So today, if it's just 1 bottle of wine, we drink 1 today and then we'll drink the next day because there's simply no replenishing. And that's what COVID has taught us.
Don't you just love the way she talks about reinventing her other business as well? It's just fantastic. So just 3 more slides, I think. We just did a quick dip check in our pre-retiree cohort around, these we defined as those aged 50 plus. And we asked them if their retirement plans or the way they're managing their retirement plans has changed in any way due to COVID, and 47, so almost 1 in 2 said yes, it has. And what were the 2 main ways that they said they'd been influenced? Well, firstly, it was 16% said they'd had to dip in to their retirement savings or used up some or all of it. And then another 16% said they've been unable to make contributions to their retirement, to their pension or to their retirement funds. Right, so as I said, on a lighter note to end off before I hand over to John, we just asked people how they're entertaining themselves at home, or how have they been. I'm not going to read through them all. I think the top lot are very much the first 5, some that we probably expected: reading more, watching more movies, exercising more, chatting with friends. And then an interesting one popped up, which was, I'm learning something new, or I'm upskilling myself in some way. And when we asked people, well, what are you doing new? How are you upskilling? These are the responses we got. So either it's an academic course that I'm doing, or I'm learning how to cook or bake or do home repairs, big one. How to take care of my garden, car repairs. So all things that will help with saving costs or saving expenses at the end of the day. So very interesting there. I wonder what you've been doing. And that would be interesting to know. So on that note, I'm going to say farewell for now, for a few minutes, while I hand over to John, I'm going to hand over back to Arabile, who will hand over to John to give you some great tips when it comes to saving.
Lynette, thank you so much for that. It really has been eye-opening and really to look into the state of our financial well-being and what that sort of looks like at present. You've given us plenty of food for thought and even clarified the areas we need to focus on quite urgently as individuals, even as a society. At this point, though, it's critical to remember that knowledge is only powerful when it is applied, right? And that's why this is the right moment then to invite the head of financial education at Old Mutual, that's John Manyike, to provide us with some very practical tips and tools that can help us apply our newfound knowledge and insights and help us navigate then our way through these challenging times. John, it's over to you.
Thank you, Arabile. So I think my job is simple. Lynette has shared a lot of insights from the research. We now want to take it a step further. At a practical level, what does this mean? So a lot of us know what we should do, but for some or other reason, we're just not doing what we're supposed to be doing. And I want to talk about, some of the practical things that we can pick up from the research. I do have a bit of a technical problem with my slides not moving, so I'm going to unshare and reshare. Please just bear with me. It will take just a second. Just move on to slide mode. There we are. So our research is showing that, you know, poor financial habits are at the root of poor money management. And I'm going to qualify what I'm saying in a couple of minutes. When we look at the stats that we've seen, you can see that people are already making some adjustments. And that's an indication that actually people do know what to do. So they do have the basic knowledge. So the big question is, why is it that many times we know what to do, but we're not doing? So our view is that perhaps the challenge there is really lacking the requisite motivation to do what we need to be doing. For example, a lot of us know that we do need to eat vegetables. It's good for our health. We do need to exercise or go to the gym. I have a colleague of mine who's been donating for the past 3 years, but she's never been to the gym. So clearly there's a motivation challenge there. Even when it comes to savings, we do find that as much as people know what they should do, but then we tend to have a challenge with you know, having the motivation to save, and we're not doing it consistently. But what is interesting also from what we're picking up from this research is that we're going to look at you know, how people are coping. And if anybody were to ask a question, what should people do given the current pandemic conditions in order to cope with the disposable income that is shrinking? And I think there are a lot of cues and a lot of tips we can take from there. So one big challenge also is struggling with setting clear goals and actually having a plan. Ironically, I had the pleasure of interviewing a certain gentleman about 2 days ago who actually squandered 1.4 million in 8 months. I mean, the young man got money from the road accident fund. So when I asked him if he had a plan, he said actually he had no plan whatsoever. And most of that money was actually spent in clothes and having parties and so on, because there was certainly no clear plan. So everybody needs a plan. And this is why we always use every opportunity to talk about the value of financial advice, why it's important for people to speak to a financial advice, especially when it gets to a point where people have to reprioritize and decide what they need to do with their money, especially when people are facing some serious constraint. So the action of saving is actually behavior based. You know, so if we cannot avoid the fact that there are some behavioral issues that we struggle with, you know, which informs how we make those decisions when we have to prioritize and so on. I mean, these are stats that have already come through, with 87% people claiming that COVID has actually changed the way they think about money. So thinking about money is one thing. You know, what perspective have you adopted when it comes to money? There are some good ways that we're seeing that people have changed, but also there are some questionable things that we're going to highlight. So let's look at you know, some of the different ways that we're seeing from South Africans and how they're coping currently. So one, which is certainly a good side, we're seeing people adjusting their lifestyle and spending habits and looking at their budgets. And this is supported by the stats that says 62% of our people are actually cutting expenses where they can. And this is not a nice exercise to do, by the way, because you have to sacrifice certain things. But the question is, in that exercise where you have to decide what values influence that, what habits influence your decision making, and you will see later on when we look at some of the questionable decisions, you will see how these things are now playing out in how people are taking this decision. The second biggest thing that we are picking up from this is that 37% are now starting to build up a financial buffer. So unfortunately, we've had to face this financial shock for us to realize that actually having an emergency fund is not a luxury. It's something that we have. It is a necessity. And we're seeing now people starting to do a lot more of that. The third biggest thing that we're also picking up, you know, from these stats is that people are now more aware about the dangers of bad debt. And that's why we're seeing about 50% of them paying down their debt. Those are very good things that we are seeing. Again, answering the question about what should people do, given all these challenges, a lot of people are under pressure. It's either you are affected, or it could be you could be affected indirectly because you have a partner who's either lost a job or had a salary cut or whatever the case may be. We are seeing people taking on more than one job, and that's the polyjobbers that Lynette spoke about. Again, that is done to actually try and improve one's income, and we'll talk about some of the benefits of being a polyjobber. I know that we had to convince our CEO that the polyjobbers must still, acknowledge the employer's policies from a conflict point of view, so that you also don't find yourself having to compromise yourself when you're becoming a polyjobber. So let's look at a list of what South Africans are doing. We've seen that people are using rewards and loyalty offerings. Again, this means loyalty rewards and or rewards programs are actually a new emergency fund. That's a good thing. It's one thing that I think we can take from there. We can learn from how people are coping with this phenomenon. The second thing of the issue of cutting down on expenses, opting for downgrade. Downgrading also is going to challenge people's mindset, because if you suddenly have to move or sell your house and move in with family, you have to be at peace. You have to convince yourself that it's the right thing to do. But if you're still having withdrawal issues, it's going to be very difficult to make such tough decisions. As people are cutting, they're also looking at subscriptions, memberships, perhaps cell phone contracts, gyms, or another person opting to exercise at home, but also switching from specific brands or switching to supermarkets that are more affordable. Again, very, very important cues or lessons to be learned from there. And then we're also seeing people diversifying informal savings, having multiple savings, but also we're seeing a good sign where even the Stockpiles themselves are saying, look, we're not going to be borrowing our members' money, because they realize that very often that money doesn't come back. So again, really encouraging people to save the little that they have. We've also seen people moving children to cheaper schools. Again, very good tip to consider for many consumers out there, because ultimately that reduces our expenses and so on. Now let's look at some of the questionable choices. We say questionable choices because, yes, on one hand, we could see this as forced financial decisions, like people cashing in on their savings or policies. And when somebody says, look, I have to put bread on the table, and people end up cashing on their savings. What we're saying here is this should be the last resort. Because again, you can't judge people who are saying this is the only way. Why are we saying this should be a last resort? You must have done the exercise of looking at where you can cut, where you can downgrade, and possibly alternative streams of income so that you still retain your savings. We've seen people cutting down on medical aid, life insurance, short-term insurance. Short-term insurance is also a concerning one, especially when we already know that about 70% of the cars that are on the roads, on our roads, are actually not insured. And the risk here is that if you're paying installments for the car and the car is not insured, imagine what would happen if there's an accident or if your car is stolen. It means you will be forced to continue paying installments for a car that you're actually not driving. So again, these are some lessons. We just need to find a way to sensitize people to understand, so that we make quality decisions when it comes to these type of decisions of cutting and so on. I know some of you might already be ready to ask questions around, perhaps retirement withdrawals. The discussions that have been brought to our table by Treasury. Again, I think a lot of things that can be said on that. On the one hand, you're looking at a limited window, to allow people to do that, but there are a lot of precautions that we need to take there, because when there are challenges with habits, we might find ourselves worsening the savings situation that we're already in. Another thing that we're looking at, as much as there are people who are paying down their debt, but we're also seeing an increase of others actually borrowing more. So that worsens the cycle of indebtedness and other people falling behind on their payments. Now, I want to show you what some of the artists are saying on how they've been coping during the pandemic, because I think there's a lot to learn from them, even those of us who are not necessarily artists. But if you listen to what they're saying, I think there's quite a number of things to.
It's just been announced now that we can't perform anymore. And this is how I put bread and butter on the table. What do I do?
Well, a big part of us as artists, where we make our money, most of our money is shows.
How do I have a career after this?
We can see what it's doing to us. What are you going to do about it?
I feel like there's artists now that are going through the most, but it was going to happen anyway, whether it was locked down or not, because of maybe they were not looking after their finances or you were not expanding yourself. So I think this has taught us to be able to always prepare for the worst.
It's not coming at a place where you can just figure it out while you're doing what you normally do. You kind of just have to adapt or not exist.
I sort of had to come back, artist, business mode. You need other revenue streams.
I did a lot of live streams, a lot of interviews on my laptop and on my phone.
What I did is just shifted the focus of my business into brand partnerships and musical brands. You need to understand your strength as an artist and how to be able to maximize on it.
The hustle is whatever this face can get, whatever this voice can do right now, you go do it because it's real.
Every musician is his own industry. You got to make your mojo work. If you believe in yourself, people will believe in you.
All right. I think what we're learning there as well is that artists have also had to be very creative in order to sustain their livelihood. And I think it's something that not only applies to artists, but also customers and the communities at large. So at Old Mutual, financial education is part of our DNA. So we do our best to use some of our brand and sponsorship properties to lead with financial education, to talk to our customers and communities about, how to manage their money. And we've also done the same, especially with young people, where we partnered with Idols SA and where we actually talk about how they manage their money. And this is a clip with the winner of 2020 Idols SA, and let's hear what she said.
Hello, Zama.
Hi, sir.
How are you?
I'm good, thanks. How are you?
Good. Zama, today you attended the On the Money Financial Education session.
Yeah.
What did you learn about money?
What I learned was, not only is it important to save money, but also you must have other sources of income in the side.
Okay.
Yeah.
Do you think that only applies to musicians, or is it a principle that must apply to anybody?
I think it should apply to everyone else,
yeah,
not only in the music industry.
Okay.
Because we need money, and one job I don't think
is enough.
Yeah.
Based on what you learned today, what do you think is the worst thing that could happen to any artist or anybody for that matter who doesn't plan financially?
Going broke.
Yeah.
Yeah. That's the worst thing that could happen to anyone.
So what is your worst fear when it comes to money?
It would really have to be being broke, because I don't think money would change me.
Yeah.
I don't think money changes anyone for that matter.
Okay.
So going broke.
Okay. Anyway, Zama, wishing you all the best.
Thank you so much.
Thank you very much. Awesome. Hello, Zama.
Again, I think we're picking up from there that, the subject of having multiple streams of income is something that we've been consistent about at Old Mutual. And we're seeing that also come through the research itself. So here are some of the benefits of being a polyjobber. One, okay, of course, the most obvious one is that you make extra money. But more importantly, it helps you to reach your financial goals faster. It improves your financial stability, and also relieves financial stress. And of course, having to deal with debt as well. So I think in the interest of time, I think our point has been made. We're going to try and leave a bit of time for questions. I'm just going to play the last clip, and then we I'll hand over back to Arabile.
My name is Inga Sabata. I'm 9 to 5. I'm a PR communications consultant. And then 5 to 9, I'm the owner and founder of Stitch by Inga. So at Old Mutual, I'm responsible for their external communications. So we deal with a lot of media relations, making sure that their reputation is protected, or if not protected, defended at least. That's generally my role at Old Mutual. I started Stitch by Inga almost 3 years ago, so it will be 3 years in May. The intention was only to solve for myself. It was never to start a business really, but a lot of people started being attracted and asking information about where I bought my stuff, who made it, and then I made it for myself. And then my first client asked me to make pencil skirts for her because she likes pencil skirts. And then she told other people told other people, and then Stitch by Inga grew. And then 2 years ago, I moved in here. So I took both our cars out of our double garage and then converted it into this space. Finding balance was not really my biggest challenge, to be honest with you. I structure my day very, very well. I start with jogging in the morning, and then after that, check emails, respond to emails. And when I'm focused on my 9 to 5, I'm focused. And when I'm done with my 9 to 5, I'm done, because I still have another company that I need to run, which is Stitch by Inga. So when COVID-19 happened last year, I was worried. I was really worried. I thought, this is the end of my business. I have to shut down. I have to lay people off. But funny enough, the opposite happened. People started buying online. If anything, it's like it was the rise of support local and buy local. And so my business grew. I realized that no matter what happens, your business will be fine. It will be. You just need to make sure that, whatever processes you have are in place, you remain consistent, you remain committed, determined, and you just press on. So I'm very excited. I can't wait, actually, to see where this business goes.
Thank you very much. Over to Arabile.
John, thank you so much for that. Very enriching and really critical. So thank you for sharing so many practical and simple things that we could do then to empower ourselves for tomorrow. The reason why so many South Africans perhaps don't manage their finances better is not that they're unwilling to do so. It's that perhaps they lack the confidence and or even the tools to do so. And that's why financial literacy plays such a key role in enabling us to become the boss of our own money. Now, before we wrap up our session today and respond to some of your questions in the Q&A session, I am delighted to welcome the newly appointed head of marketing at Old Mutual, Musala Phillips, to share perhaps some of his views with you. Young and dynamic, Musala has more than 15 years experience of managing brands and enhancing their relevance across multiple geographies in Europe, the Middle East, and Africa. Musala, it's over to you.
Thank you very much, Arabile. And I just want to say big thank you for joining us today to hear all these great insights. I think for me, what jumped out as one of the key things and the reason why we even coined this session, Know Better, Do Better, is Zama's response to John's question, what will happen? And she went, you, and that's what we want to avoid. Having many South Africans to say you, but when I look at what Isaac shared, what Lynette shared, and what John shared, what's very interesting is the duality that is existing. All of us know that it's been tough and it's been challenging economy-wise, has been challenging with COVID, it's been challenging political-wise. But at the same time, it's very interesting to see how South Africans are coming up to show up and find ways to bridge the gap and come with ways of helping, and seeing some of the habits changing in terms of savings and investment. Right? If you look at it from a macroeconomic perspective, Isaac shared with us, there's a reality, 1 million jobs have been lost. But at the same time, we are seeing a glimpse of hope with jobs starting to increase. We're seeing a glimpse of hope in terms of seeing household income increasing. With Lynette shared with us very interesting things, seeing polyjobbers, slashers, I know for one, I'm married to one. My wife, she's a fashion designer slash DJ slash psychology student. And last week she was sharing with me another slash that she wants to pursue. Right, and this is really what's encouraging to see, that people are finding ways and innovative ways that's coming in the midst of all the challenges that people are seeing. We're seeing hope, and we're seeing people making choices. We're seeing people making choices in terms of how to save. People, as we saw Lynette has presented to us, people are joining multiple Stockpiles. People are being innovative, and I think that for us as financial services company is really partnering with people as they're going through these journeys to help them find these solutions to better their lives. So I'd like to draw your attention that you go to www.allmutual.co.za, savings monitor, and engage with the material there. There's so much wealth of information. There's so much nuggets that this session that we had today was not even possible to fit everything. And this is, information that we're providing with everyone and making it public for everybody, because it's important that we know better, we can do better, but also to share with our family members, to share with our customers, with our clients, that collectively as South Africans, if we can equip all of us to do better in terms of financial service, financial well-being, we will do better for the country and the communities. And this information is at your fingertips. And as Old Mutual, we're here to be your trusted financial partner, to champion your positive futures and enable you to do great things every day. Thank you, Arabile, and thanks everybody for joining us.
Zala, thank you so much for that, as well as to our panelists. We appreciate all of your words. We do have very little time left, but we will be sure to record all of your questions, and we'll post the responses onto the www.oldmutual.co.za/savings monitor website. That comes along with the recording of this webinar right after today's event. Our moderators today then for your questions, Tabi Tengiwe, the General Manager for Public Affairs and Communications at Old Mutual, as well as our Senior Communications Manager, that's Nkosinathi Msiza. We could then, of course, please ask you to pose the questions to the respective panelists. I'll hand over to them then for those questions then in this time.
Thank you very much, Arabile, and thanks to our panelists. I'll go straight into it because we literally have 7 minutes. I'll probably start with the inflation and retirement fund related one, directing it directly to you, Isaac. We've seen global jitters about rising inflation, and some emerging market economies have started raising rates in response, while South Africa's central bank has elected to keep rates on hold. To what extent will the hold on rates affect saving in the country? Should consumers be fixing their investments or link them to the rate of inflation? What are the positive and negative implications of workers gaining access to their pension fund as per government's recent announcement, which is undergoing further consideration?
Yeah, so two big questions. So just on the inflation side, I think you're quite right. The questioner is quite right. I think you've seen a big increase in global inflation, but that really is a function of the global economy reopening, and demand has basically run ahead of supply. Companies weren't able to respond quickly to this reopening demand, and that's seen prices shoot up very quickly. That should moderate over time. To use a very, very simple example, like a year and a half ago, none of us could find hand sanitizer, and toilet rolls were sold out in the shops. And that is because demand just exploded and supply couldn't respond. But today, that's not an issue. You can find hand sanitizer anywhere, and toilet paper is neither scarce nor expensive. So I think the same will happen with global inflationary pressures. They will fade. And I think that implies that the SA Reserve Bank can keep interest rates relatively low. I don't think they'll stay at these levels forever, but I think starting probably next year, you will see a moderate hiking cycle. Because the outlook for inflation in South Africa is still pretty muted, and should remain on target, around 4.5%. So what does that mean for investors? It means, number one, your returns from a bank deposit or a money market fund will probably remain low. It'll probably not go up much, and therefore you need to face a choice. Either I accept those relatively low returns from the supposedly safe asset, or I will need to think about somewhere else to put the money and maybe invest in a fund that has exposure to the market, where you can potentially earn more returns, but also you have to sit with more volatility. Ultimately, it comes down to individual choice. You need to think about what are my financial needs and circumstances, and obviously, we would always urge you to speak to a financial advisor to help you sort out those things. In terms of the pension fund withdrawals, obviously there are costs and benefits, or pros and cons to early access to pension funds. All I'll say at this stage is, the regulations haven't been finalized. There's still a process to finalize that regulations, and obviously we will communicate to our clients and stakeholders how we think they should proceed on this issue. Thank you.
Thank you, Isak. John, a question for you. If you could turn on your camera and your mic, please. If financial literacy is so important for economic growth, how do we find more resources to address this tough issue with South Africans? Is it only a financial sector responsibility, or should all sectors step in and contribute resources?
I think that's a good question. And I think a lot of work is already being done by the industry. The industry is spending about 0.4% of the net profit after tax towards consumer financial education. But there are also collaborative campaigns that are taking place at the trade association level. We're seeing the likes of ASISA, as well as the Banking Association doing that piece of work. But the kind of collaboration that we need between labor, business, and financial institution is more around the access issue. How do we provide access for these kind of sessions to be run, not only for people who are the working class, but also for communities at large? I mean, if we're serious about financial inclusion, we certainly have to take financial education to the market. I mean, there is a backlog of financial literacy, not only in South Africa, but in the world. So that collaboration is going to be key, and everybody brings in what they're able to provide. If it's union, they are able to provide an audience or a captive audience, big business access to their employees, and then of course collaborating with NGOs to take financial education to communities. Thank you.
Thank you, John. I'll pose one last question, and maybe this is for you, Lynette. Are people polyjobbing to survive or to create wealth? So-called side gigs for survival is a sign of a distressed financial situation. Your view?
Also a good question, and I think if we look at and we delve into the results a little bit more, it is to survive mostly, to be able to cover your bills and do all that. There is a portion of that is to build wealth, but certainly the priority there, or the main aim, has been to bridge the gap and to survive.
Thank you, Lynette. We are so out of time, and I will ask our panelists perhaps to text responses to some of the questions that we have. And as stated, Arabile will advise where the rest of the questions will be answered and the rest of the information will be available. Thank you so much. Over to you, Arabile.
Tabi, thank you so much for that, as well as to Nkosinathi for helping to curate some of those questions. Unfortunately, yeah, that is all the time we do have for this session. Thank you to all of you for attending today's session. And thank you once again to Old Mutual for championing mutually positive futures every day, and for ensuring that we know better and thus will do better. For more information, please remember that you can find it on our website, www.oldmutual.co.za/savings monitor. From myself, Arabile Kumete, and the rest of the team, thank you so much for joining us. Remember, the buck stops here.